We hear the word investment all the time. I'm investing in my education. This new TV is an investment. But what does that word really mean? Is a new car an investment? No, it's not. It's an expense. Let's get real. Today, we're breaking down the only 3 types of investments that actually exist. In the world of finance, an investment is simple. It's something you buy with the expectation that it will produce income or profit, or both. That's it. It's not a car, a TV, or even your morning coffee, no matter how much it helps you. So, if those aren't investments, what are? There are only 3 main categories: ownership, lending, and cash equivalents. Let's dive in. First up, ownership investments. This is what most people think of when they hear the word investing. It's about owning a part of something that will hopefully grow in value. The most common example is stocks. When you buy a stock, you're buying a small piece of a company. You own it, and you can make money in 2 ways. Capital gains. This is when the stock's price goes up. Say you buy a share of a company for $100 and sell it later for $150. That $50 profit is a capital gain. Dividends. Some companies share their profits with you, the shareholder. This cash payment is called a dividend. It's basically a thank you note from the company, but in money form. But it's not just stocks. Other ownership investments include your own business. If you start a company, you own it. And if it's successful, you can make a huge fortune. Think Bill Gates or Jeff Bezos. Real estate. Buying a house or apartment to rent out or resell is a classic ownership investment. The hope is that its value will increase over time. Precious objects. Things like gold, collectibles, or art. These are ownership investments only if you buy them with the intention of selling them for a profit later. Remember, a new couch for your living room is an expense. A famous painting you plan to sell is an investment. The second type is lending investments. This one's simple. You are the lender. You lend money to a company, a bank, or even the government, and they pay you back with interest. The risk is usually lower than ownership investments, so the rewards are more modest. The simplest example? A savings account. You put your money in the bank. The bank pays you a little interest. In return, the bank uses your money to lend to other people and businesses at a higher rate. You're essentially lending the bank your cash. A more well-known example is a bond. When you buy a bond, you're lending money to a company or a government. They agree to pay you back with a set amount of interest over a set period. It's a bit like an IOU. The primary risk is that the borrower goes bankrupt and can't pay you back. But for things like U.S. government bonds, the risk is extremely low. Finally, we have cash equivalents. These are investments that are as good as cash. They are highly liquid, meaning you can convert them back into cash very quickly without losing much value. They generally offer a small return. A great example is a money market fund. It's like a savings account, but often with a slightly higher interest rate. The trade-off is that you might agree to leave the money alone for a specific period, like a few months or a year. The main benefit is their liquidity. You can easily access the money when you need it. A great example is a money market fund. It's like a savings account, but often with a slightly higher interest rate. The trade-off is that you might agree to leave the money alone for a specific period, like a few months or a year. The main benefit is their liquidity. You can easily access the money when you need it. So there you have it. The next time you hear someone say they're investing in a new gadget or an expensive meal, you'll know the truth. An investment is not something that loses value over time. It's one of these 3 things. Ownership, like stocks or real estate. Lending, like bonds or savings accounts. Or a cash equivalent, like a money market fund. Understanding these basic categories is the first step to building a solid financial future. What's the biggest investment mistake you've ever made? Or the best one? Let me know in the comments below. Don't forget to like this video and subscribe for more straightforward financial tips. Thanks for watching.